Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 30th. Excuse me, I'm getting my months mixed up here. We got a bunch of economic news releases, as you can see here. We'll start off with the weekly jobless claims. So remember last week we had 296,000 people applying for unemployment. The forecast was supposed to dip down a little bit to 287. It dipped down even further, 262,000 people applying for unemployment. So good news right there, fewer people applying for unemployment. On the other hand, we have an employment cost index, the ECI, for the first quarter. This is basically the cost of what is cost employing workers here. And the previous reporting came in at 0.5%. The forecast was supposed to go up a little bit to 0.6% and jumped all the way up to 0.7%. So this will be an important gauge for the Fed to be watching after yesterday's FOMC because this will help them gauge as to wage inflation, so the cost of employment for companies out there. So we'll have to see if if this continues to grow as what we're seeing right here. Personal income for the month of March. So we had a 0.4% increase in the month of February. It was supposed to dip down a little bit to 0.2, and it was basically nil. So people weren't making more money in the month of March. That's unfortunate. Consumer spending, on the other hand, so we got the opposite here. We got 0.2% growth in February, and spending was supposed to go up in March at 0.5%, and it went up 0.4%. Pretty close to expectations, but not quite. It did go up, though, at least. Core inflation, this is the PCE. And when you strip out food and energy, we got the core inflation. So this is personal consumption expenditure. This is the Fed's favorite gauge for inflation on the consumer level. So we had a 0.1% in the month of February. It was supposed to go up to 0.2, and it just went up 0.1% in March as well. And then we got Chicago PMI, which is also a manufacturing region in Chicago area. So in March, we had a 46.3. That's a sign of contraction, so it contracted in that area. And in the month of April, it did jump up a little bit to 52, back into expansion territory. So good news right there. Again, a little mixed overall here. We're seeing, again, a cost of employment going up. On one hand, personal income didn't go up, which is unfortunate. But core inflation still seems very low. Good news, Chicago PMI is up. Consumer spending's up a little bit, and weekly jobless claims are down, so fewer people applying for unemployment. Right now, the stock market's down. The Dow is down over 100 so far this morning, and as well as the bond market's down a bit. So that means interest rates have climbed up a little bit. Pricing has gotten worse for interest rates. So pretty big, sharp decline yesterday, and we got a little bit more of a decline today. So we'll have to kind of wait and see as to where the floor is in this level here. So it looks. Right now, the trending is going downwards. All right, folks, you guys have a great day, and also touch on what we've been talking about this week. The new programs for our partners out there is the STAR program. The APM has a new program called the STAR program. It's for firefighters, for policemen, as well as teachers, where we want to kind of give our thanks and show our gratitude by developing this program, as we felt they were underserved in our market. And with the CalPERS and the CalSTRS loans disappearing, we felt this is one way we can kind of give back, and that was by reducing their closing costs by $800. So, in terms of underwriting and processing fees, it's at a flat $595 for those two items there, and when you see all the breakdowns of closing costs. So, anyways, we just want to kind of give our thanks and help those folks out with their home needs, and we wish you guys all the best. We'll see you guys tomorrow, and then next week I'll talk a little bit more about some of the new programs that we'll be rolling out here as well. So stay tuned. Have a wonderful day. Thanks again for watching. We'll see you tomorrow. Bye.